All right, how's it going? My name's Joseph Makoyak, and this is my presentation on Nike. So for today, going into a little bit about overview and what we'll be talking about today, we'll be talking about investment thesis, industry overview, our company overview, and our valuation analysis. So a little bit about Nike's investment thesis. I went on to say that I believe Nike will be a great fit for our portfolio, especially with their current price at 129.46. I said that this would sit very nicely next to Tractor Supply within the consumer discretionary category, and also clean up a little bit of the mess that Royal Caribbean ended up making within our coverage throughout the portfolio. Tractor Supply is currently trading at a price of 139.37, and Nike's price currently rose to 134.25. Their 52-week low was 60, and their 52-week high was 131.34. So a little more about Nike. This right here, this quote is from Nike's mission statement. It says that our mission is what drives us to do everything possible to expand human potential. We do that by creating a groundbreaking sport innovations, by making our products more sustainable, and building a creative and diverse global team, and by making a positive impact in communities where we live and work. Sorry about this. Let me just. My recommendation would be to buy. The current price during coverage was 129.46, and through our calculation, the target price is projected to rise to 173.10. I really like this last statement within their mission statement, how they're making an impact on communities of where we live and work. Nike is extremely popular, and through endorsements of professional sport players, many kids and many just high school athletes or even college athletes, they look up to these professional athletes as heroes. And that's great because they're working towards something that's great and beyond what many people can achieve. So for some of the catalysts, Nike is delivering more choices of athletic apparel, footwear, and expansion for new and existing platforms. Nike has also been furthering their research and innovation within the digital aspect for the company. And for the first quarter of 2019, Nike's digital revenue grew about 42%. Going on to the risks for Nike, we see that reduced consumer demand for Nike's products as consumers seek to reduce or delay discretionary spending in response to COVID-19. That's going to happen just because as Nike is a consumer discretionary product and it's in that category, it's not a need, it's more of a want, and it's very popular, and their products can be expensive at times. So that's pretty pretty similar to what people would do within this response to COVID-19. You can see that seasonality and fluctuations within operating results, and failure to continue or obtain high quality endorsers, which is very unlikely because of how popular it is and how popular it is within the professional sport world.
Joey, I have a question. Where they're
Yeah.
linked to a lot of sports players, and I mean, I don't know a lot about sports, but in the news lately, a lot of professional athletes have been called out due to their recklessness when it comes to COVID. Have any of the athletes that Nike has been paired with, have any of them been called out, or are their players been acting responsibly?
A lot of their players have been acting responsibly. I would say especially with going like Cristiano Ronaldo, Mike Trout, Rory McIlroy, and Tiger Woods. Especially they've been doing like the PGA tournaments and everything like that, and so the response to it's pretty it's pretty positive. You know, like you see guys really following guidelines and doing everything that they need to do, especially when they're performing the sport that they're playing.
Great, thank you.
So for Nike's industry overview, like I said previously, they operate in the consumer discretionary sector, which consists of goods and services that are considered non-essential for consumers, but desirable if the discretionary income is there for them to buy. So the consumer discretionary sector is reporting for at a one-year return of 34.39%. The S&P 500 was reporting at a return of 16.11%, so it is outperforming the S&P 500. The industry is characterized by new technologies and through consistent change in trends. And the sports equipment and accessory and apparel industry reported a valuation of $407,403 in 2019. and this is expected to grow at a constant annual growth rate of 7.25%. And even in this graph to the right, which is their price graph for their 1-year return, you can see that Nike is the black line, and they are on top as of 2020 right now. A little bit about Nike's company overview. Nike designs and develops and markets athletic footwear, apparel, equipment, and accessory products for men, women, and children. So the graph to the right is their segment breakdown, where you can see that footwear is their leading at 63%, followed by apparel, and also followed by equipment, which is the least, but it incorporates equipment, bags, socks, sports balls, timepieces, as well as sporting equipment of workout equipment and weights and all of that. Nike's products account for 95% of total revenue, which operate through 6 categories: running, Nike basketball, Jordan Brand, football, training, and sportswear. And those are all broken down into the 3 categories for the 3 segments that go into the graph on the right. So a little bit about management. John J. Donahue, he's the current president and CEO for Nike. He's been doing a very well job making sure that Nike stays on top when it's working with its working industry of footwear, apparel, and sporting good equipment. Before earning this position, Mr. Donahue was the president and CEO of ServiceNow Inc. in 2017 to 2019, where from here he ended up being moving to Nike and getting the president and CEO position there. Matthew Friend, who is Nike's executive vice president and CFO. Matthew Friend started as Nike's vice president and CFO in 2020. And before becoming the vice president and CFO of Nike, Matthew was the vice president of investor relations and CFO of operations in 2019 before being promoted. He started his career in 2009 at Nike, before working for the company until 2011 before being promoted to the president and vice president and CFO. So he has a pretty long tenure with Nike and has been doing an outstanding job at his position. Lastly is John F. Slucher. He is the executive vice president of global sports marketing. He has no other job titles besides marketing at Nike, and he started in 2007, and he's been working up he worked up for a couple years until he earned his vice president of global sports marketing. So he also has had a long tenure with Nike and been doing an outstanding job within the marketing department, finding new strategic ways to and innovative ways to make sure that the company is always on top and doing what they need to do to continue to be popular and just come out on top. So a little bit about revenue growth and breakdown. As you can see here in the graph to the right, through the valuation of 10 years, Nike has seen consistent revenue growth. We can see here that in 2021, there's a little bit of a drop. That's due to our new normal, as you say it now, with COVID-19, and how people aren't necessarily always going to be going out to stores to buy now. They're more on the e-commerce aspect of it. So really 2021 is almost just like a little bit of a new start for even like all companies within their industry and other industries as well. Looking out through the year of 2023, we can see that revenue is projected to grow 68%. Nike is holding strong for revenue holdings within the near future. In this graph below, this shows us what their footwear and apparel and equipment breakdown would be. Footwear is Nike's leading revenue accumulator at 23.3 million, followed by apparel at 10.9 million and equipment at 1.28 million.
Joe, you're absolutely right about 2021 being a new restart for this industry. I actually did see something in the news yesterday saying that they'll never be the same, especially after COVID, and that stores and retail need to actually redefine themselves. There is not going to be going back to pre-COVID, that this is actually a new, platform for them, and they need to adjust or they're going to get lost moving forward. So your assessment there is actually spot on.
Thank you very much. I appreciate that. So a little bit about legislation and regulation. There wasn't too much about this, but the most recent claim filed against Nike was reported in November of 2019. This claim was filed because of claims of a toxic work environment. Plaintiffs allege that Nike's directors knew about a widespread sexual harassment and gender discrimination claims at the company and didn't do enough to protect investors. Nike further went on to say that they do not discriminate against anybody. There wasn't enough factual statements within this claim, and the case really just kind of got lost into everything. So they ended up just closing the case and closing it out just because there wasn't enough there just to prove what was really going on. And for regulation, Nike currently doesn't face any regulation issues within its industry. I ended up saying the only factor affecting the company would be changes to the U.S. trade policy, tariff and import and export regulations, which affect the financial conditions of the company as well as operations of the company. Next, we'll get into the valuation analysis of Nike. A little bit about EBITDA and gross profit, as you can see from my DCF that we ended up creating in class. Analyzing DCF provided above, Nike is showing steady growth of revenue and in earnings before interest and taxes. As you can see, Nike has continued to increase their revenue. It's steadily, it's not big jumps, but they are increasing, and you can constantly see growth within their numbers. Earnings have also continued to show growth. This shows that the company and to the investors that the company is headed in the right direction in the near future. They're not losing money, and they're not going to be looked at as this high top company that's leading in the industry right now. But in the years projected, they might not be. It's not looking like that. So it's looking like for long-term growth, the company will be sustainable and very just coming out on top and leading within the industry. Gross profit also is predicted to grow after experiencing complications in the fiscal year of 2020. This was due, like I said before, to COVID-19 and the problems caused in the market in every aspect. EBITDA percent margin, they were hovering around the 14 to 15% mark until the last 2 years. It jumped. It's projected to jump to 16%. I ended up going to say this is relatively a little low, but Nike is a stable company, especially when comparing their competitors of Puma, Under Armour, and Adidas. Nike has a weighted average cost of capital of 5.4%, an exit multiple of 8 times EBITDA. This ends up making their target price rise to $173. And when I was currently covering Nike previously, their price reported $128.37, and as I said before, they did increase their trading price to $134.25. This graph right here is comparing Nike's enterprise value with EBITDA. Nike's EV and EBITDA ratio has shown steady growth throughout 3 years, from 2017 to 2020. In 2017, Nike reported an enterprise value and EBITDA ratio of 16.66%, 2018, 23.37, 2019, 23.83, and 2020, 37.14. So within their enterprise value and EBITDA ratio, we continue to see growth projected throughout the years and even into future years. A little bit of their peer group analysis. These are the companies and Nike's competitors, as well as their market caps. As you can see to the right, that Nike is leading, followed by Adidas, after that followed by Puma, and then Under Armour. So a little bit about their peer group analysis. I went on to say that Nike is fairly valued compared to their competitors, as their market cap is highest among all competitors. Nike has also portrayed strong revenue growth numbers where they beat many of their competitors in the leading industry. And Nike reported revenue growth year over year of 6.26%. This was 1.73% lower than the industry average of 7.99. And we went on to find that because within the industry and everything going on right now, many companies aren't meeting or even getting above that industry average just because of complications of what are going on right now and how the market is still in a little bit of like a reboot mode. So I think within the near future that even that they will see to beat the industry average just because of how big they are and how much growth they seem to be leading within the next projected years of work. So a little bit about their peer group analysis continued. Revenue comparing Nike and their competitors, as well as Nike's net income comparing their competitors. Nike reported revenues of $10.76 billion. This was followed by Puma at 1.75 billion, and then Under Armour at 1.18 billion. Adidas is currently at 6.71 billion, but with a constant annual growth rate of negative 15.23 right now, Adidas is actually looking towards declining within their revenue and just in more aspects of their company. Nike was leading with a reported net income of 1.18 billion. The biggest downfall that we can see from this was in May of 2020, and net income saw a decrease for about 9.12%. Talk about earnings per share for Nike. As you can see here, earnings per share does look very promising, especially within the expected near future. The graph to the right depicts a decrease in 2020. As you can see right here, it decreased by $1.75, but within the next 3 years of projected growth, it increased to $2.50. This is a big jump, but Nike is very promising and popular, as said before. And EPS shows a very promising trend in the 10 years of the evaluation of Nike. Lastly is Nike's gross margin. Nike's gross margin, if you look in the graph to the right, you can see it's a very sporadic movement, and there is more of a decline coming in projected growth years. Nike's growth margin, they hover around 44% to low 40s, especially within the next 3 years. This also shows that Nike's revenue is at a much higher to median range when comparing their cost of goods sold. And Nike's cost of goods sold in 2020 was 20.85 million, and comparing revenue in 2020, they compared it to 37.42 million. And thank you very much. That is my presentation.
So Joey, you see this as a complement to the Thunder Fund with Tractor Supply in Royal Caribbean. I mean, recent days, Royal Caribbean, I know we were taking a hit for a while, but we've actually have bounced back. That I think our loss is only in single digits right now.
Mm-hmm. Yeah, I did recently see that too. I saw that they grew to about their $80, which was pretty good too. But I think even if we had Nike sitting next to Royal Caribbean too, as they seem to increase the growth throughout the years projected, and with Tractor Supply, it would be a great fit for the consumer discretionary sector.
Yes, I mean, even though with consumer discretionary, they're all just different sectors, you know, with different areas within different industries within that sector. So, and we don't have anything like Nike in the Thunder Fund. So,
yep.
All right. Does anyone have any questions? No. All right. Well, thank you. You did a great job, and we'll definitely keep under consideration when we make our determinations next week.
Thank you very much.